What's going on, guys? It's your boy City Chopper Trading, and in this video we're gonna go over the trend time frame. This is part 3 of your multi-part series. If you haven't watched part 1 or part 2, you should go back and watch those. Links in the description. Let's get into it. So in part 1, I introduced the theory behind the supply and demand strategy and like why it works and what makes it tick exactly. And then in part 2, I went over the curve, the supply and demand curve, and figuring out where you are on the curve, so you can figure out if you should be looking for buying opportunities or selling opportunities. And in this video, we're gonna go over how to identify the trend on a lower time frame from your supply and demand curve time frame, and figure out if the market agrees with what your supply and demand curve says. So for example, if say you're low on the supply and demand curve, meaning you're next to demand, that means you should be looking for buying opportunities. However, if the trend time frame is downwards, right, it's going into demand zone and it's going downwards, then you should wait for a little bit and confirm that the trend on the middle time frame is changing. You know, that buyers are starting to get into control and that sellers just don't pierce through the demand zone. However, say you're next to the demand zone and the trend is up. Everything is aligned at that point, and you should definitely take the trade at that point. For example, say prices are low and the trend is broken, the downtrend is broken, and now there's a small uptrend, right? Now that when prices come back a little bit and retract a little bit, take the buy. Place the buy order and just go after it, alright? So I'm gonna get more into depth. We're gonna do that by going over to my computer, so let's do that right now. So what you're looking at right now is Bitcoin, and the reason why I pulled up Bitcoin is to drive home the point that this could be used, this supply and demand strategy can be used literally for almost anything. Stocks, Bitcoin, cryptocurrencies, Forex, everything. But that's beside the point. Now, you're probably thinking, okay, how do we identify the trend? Yeah, this is what you do. So daily I'm on a daily time frame right now, and that's my supply and demand curve, right? These black zones are my supply and demand zone, and I divided it into thirds to see where prices are. Right now, it's in the middle, and it's starting to get into demand zones. So that being said, let's move down to a 4-hour time frame. Now this is where we're going to be checking the trend. We're going to be like, okay, what's the trend of this market on the 4-hour time frame? Now this is how you identify the trend. You follow prices. Where is the multi-line tool? It's been a while since I've used TradingView this heavily. Here it is, polyline. So what you want to do is just simply mark follow prices. Boom, boom, boom. High lows, lows highs, all that kind of good stuff. And then bam. Alright, so this little drop right here, we can ignore it. It's not that significant compared to the other ones. And I say that from tested judgment. This is just something that you'll learn over experience. But this could just been one big line, like right here. Like that could have been one big line, and it's the same thing almost. So that being said, what's the trend here? What are we making? We're making lower highs. You see this? There's a high, there's a high, there's a high, and there's a high, right? And we're making lower lows. There's a low, there's a low, there's a low, right? So what's our trend? Our trend right now is down. That's our trend. Now, recently the trend has been so sharply down that prices are nowhere even near this trend line. And prices need to break this trend line for us to know that the prices the momentum is changing on the middle time frame. Now, since the drop was so sharp, this requires us to go down to like a 1-hour time frame and do the same thing. So this is how it would be done. So like that, and then flattened out a little bit, and then dropped again, and then moved up a little bit. So kind of went just straight down, and now it's up here. Okay. So that, drawing that, now we know that the trend is down on the hourly time frame. Okay, let's fix it up a little bit. Now, if prices are able to break this trend line, break this momentum, then we know that truly buyers are now in control. And if prices come back to that zone, it's a great zone to take a buy or a buy trade. Now, let's talk about the implications of this. Now you know how to now you kind of know how to find it. Let's talk about the implications. Actually, you know what? Let's try a chart where there's an uptrend, so you guys know how to identify that too. All right. Let me clear all this stuff out of here. This is an old chart. Okay. Here is a uptrend. This is how we would do it. We just follow prices. All right. So we just go up here, down here, down here, down here, and then up here, and then just somewhere around there. All right. So what do we have here? Now there's a big spike in the market, but that's fine because we still have a uptrend right here. You see this? We have a higher low and higher high. And all you need is 2 data points for you to make a line. That's the definition of a line, connecting 2 points together. So there you go. That's how you would identify an uptrend. Where buyers are in control, meaning demand zones are being created and supply zones are being smashed through. For example, this hourly supply zone was smashed through, just bop. You see how it was tested right here, and we had a significant drop after that, and it was tested right here, and it retraced, but prices eventually broke through. However, demand zones are being respected. You see how prices fell sharply right here, tested it right there, and then went right back up? Demand zones are being respected, meaning the buyers are in control. For example, here's another spike in the market. Prices come back, touch it, and then eventually start going back up. And here's another one. It didn't get as close as I want it to be. The market turned around just before it was in the zone, meaning that buyers are so much in control that it doesn't even have to get to the zone. Now, right here is a crucial supply zone. Let's see if buyers can smash through it. Now, this would be a great example of us dropping down to the 15 minutes time frame and seeing if that the trend has changed. Right off the bat, I can see that we are in a sideways market on the 15-minute on the Euro USD, meaning that, hey, sellers might just be able to turn this thing around. Now, what does it mean? Like I was saying before I went off trying to explain what a demand zone or an uptrend looks like. So, you always want to be with the trend. You never want to go against the trend. Let me write that down, actually. Let me pull up let's pull up text edit, and I will write this down for you guys because I think this is just so damn important. Whoa, where'd it go? So important. Okay, bolden it up a little bit. Never go against the trend. You will get burned. Period. Like, it's that simple. You will get burned. But here's the thing. A lot of people try to predict when the trend is going to change. And you're going to mess up more than be right. And that's not good. So that's why we have the middle time frame. That's why we say, hey, if the trend is up on the middle time frame, which again, if you're doing your supply and demand curve on monthly, then your trend time frame will be weekly. If you're doing your supply and demand curve on the weekly time frame, then it's going to be daily. There's just one forward. So or another great way to think about this is divide it. A day can be divided into 4 hours. 4 hours can be divided into 1 hours. 1 hour can be divided into 4 15 minutes. So like it's almost like a ratio. Now the day to 4 hour one isn't perfect because there's 6 4 hours, but that doesn't really matter. So month would go to week, a week would go to day, day to go to 4 hours, 4 hours go to 1 hour, and then 1 hour would go to 15 minutes. Alright? So never go against the trend. You will get burned. Okay? If you are in a supply zone, alright, let's write this down. If you are near supply and trend is up, wait for the trend to reverse, or actually, wait for the trend to show evidence that the market is going to change oh my god, I'm blanked out so hard there. Wait for the trend to show evidence that the market is going to change trend. So basically, if it's going up like this right here, wait for a smaller time frame to start showing evidence that the sellers are now in control. And then vice versa for demand zones. If you're near demand and trend is down, wait for the trend to show evidence that the market is going to change trend to the upside. That's basically what it is. So that's called a confirmation trade. This, what you learn right here, is going to save you a whole lot of pain. A whole lot of pain. A whole lot. Let me tell you how much pain I went through to figure this one out. Like, this right here will change your game because confirmation trades make you not go against the trend. For example, if I only showed you how to find supply and demand zones and you took this supply trade or one of the earlier supply trades, you would have get burned by now. You would have been done because here's the thing, the trend wasn't with you. You would have messed that trade up. So that's the whole point of this whole video, was to make sure that you don't go against the trend and you don't get burned. Wait for the market to show you evidence that buyers or sellers are in control and then move with the market. Don't ever go against the market. So in part 4, you're almost to the end. In part 4, we're going to talk about the execution time frame. This is where it gets super interesting. Now we're looking for how to enter the market, where to put our stop losses, where to put our take profits, how to do analysis and figure out what our risk to reward ratios are. That's where all the magic happens. But before all the magic can happen, you have to lay the groundwork. And that's the whole point of part 1, part 2, and part 3. But be on the lookout for part 4. If you're liking this series so far, hit that subscribe button, guys. I'm putting a whole lot out there. I know you guys loving it. And we're going to all make money from this, and we're going to change the world. I don't know about changing the world, but we're definitely going to make a whole lot of money from it. So this has been Sunny Chopper Trading. Peace.